All right, welcome back. It's been a little bit, so let's get right into it. Stock market update. I've got a 1 week heat map pulled up, and you can see here we're getting a little bit of rotation out of the big tech stocks, and it's spreading to other places of the market, which is great, which is healthy. People are trimming some of their winners and spreading it to some of the losers. So this is great to see because we're seeing the whole market rally broaden out. It's not just the big tech stocks that are pulling the weight. So this is really good to see. When we look at the chart, we got interest rates falling like a rock. So this is really nice to see. This is great for the bond trade that I have on. And this is just taking pressure off a lot of companies and a lot of households. So this should be good for the housing market. This should be good for a lot of things in the economy. So that's great. When we look at oil, oil is tanking also, which is great for inflation. This is a sign, though, of the economy possibly weakening, demand getting soft. Some of the jobs numbers coming out, it's definitely getting softer out there. But again, it was so hot, so strong, we're just softening up. So not the end of the world yet, but the trend is starting to come down. So we'll have to keep an eye on all of those things. When we look at the NASDAQ here, we've had just such a great run out of, November was a great month, just straight up. So, it wouldn't surprise me if we get a little bit of a curl, a little pullback, and then we can continue going higher. But again, I think we're in good shape here. There's a lot of cash on the sidelines. There's a lot of funds that need to be put into stocks that need to continue to buy bonds. That's why you're seeing the yield come down. It's because people are seeing inflation come down and saying, okay, I need to lock in 4.5%, 5%, now 4% for 10 years because we may not get that anytime soon. If the economy keeps softening, eventually the Fed will cut rates to help stimulate the economy. I don't think that'll be anytime soon, but you never know. The Fed will only cut because they have a reason to cut, like the pandemic, like 2008. So we're going to have to deal with whatever that problem is. So I'm not cheering for rate cuts because that means something is wrong. So let's not get all happy about that. So let's take a look at our bull and bear case. Pull it up here. So interest rates looking good, coming down. Inflation rate is coming down. Things are still stupid expensive. Housing market is still, prices are super high, mortgage payments are high, used car prices are high, eggs are high, food is high, travel's high, but the rate of change is not increasing like it was in the past. So I've gone on and on about this. I'm not going to talk about it anymore, but this number, it's important, and it's green because this is what the Fed is looking at. This is where the Fed, when they say they're data dependent, they're looking at inflation, and they're looking at the jobs report. If inflation keeps staying high, and if jobs keep, if the job market is super robust, they're going to want to raise rates more to cool those things off. We're seeing the jobs cool down, the job market cool down, and we're seeing the inflation rate cool down. So that is good, meaning that we have seen the end of rate hikes most likely, and the next thing that we'll wait and see is rate cuts. And again, that'll happen when we hit a recession or we hit some financial crisis. So who knows when that'll be? Could be next month, could be 2 years from now. We don't know. So the yield curve inversion, I still have it red because we are still inverted and we're starting to curl back down again. Again, we want this to normalize and get above the black line. But when it does get above the black line, we're on recession watch. So we're still keeping an eye on that. It is still red. The banks, credit crunch, still yellow. Commercial real estate, still yellow, orangish. No update there. That's going to take a long time to figure out. So let's look at some opportunities. Again, this is not too different. REITs, I still like Vici. I'm not buying anything right now. I'm waiting for a little bit of a pullback. Tech and semis, a dip is what I'm looking at, and we'll talk about a couple stocks I'm looking at. Selling options. So update, it's been a little bit. I did finish purchasing my Tesla position that I wanted to get, and so I did sell a call today on Tesla. So collecting some premium, protecting against some downside, and I have this in orange because volatility is still so low and the market is still high. It only makes sense right now to sell calls on stock that you've purchased, and you're selling calls at a strike that you're willing to sell your stock at. So when the market gets juicy, I will release an options video explaining more of this. But right now, that is something to keep an eye on, but I'm not going crazy on this. A lot of my other stocks that I have, I'm not selling calls. Like Enphase, I'm not selling calls. Amazon, I do have one call on some Amazon. But Tesla was just one where I just recently purchased it. Instead of trimming to protect against a pullback, I just wanted to sell a call, keep my shares. And if the stock dips, I'll close the call and I'll probably buy some more shares. If the stock rips, I'm okay selling because I just bought it and I'm guaranteeing a huge profit for the call that I sold. So cash and bonds, this is in black because if you are in cash, I think you need to start finding a way to either get into long duration assets. You need to start buying some stocks. Because I don't think the money market accounts are going to keep paying like they used to, especially with rates starting to fall. So you could lock in bonds if you want to keep getting the yield. You could go lock into some 1 year, 2 year, 5 years. Or you could start looking to buy some stocks. There's a lot of cash on the sideline, and that's part of the reason why you're seeing the market just go straight vertical. Is a lot of it was so many people were short, and then they had to cover their short positions. There's so much cash. People are saying, dang it, I missed this rally all year. I got to get in. So there's a lot of FOMO going on. People that have missed out and haven't been buying stocks, they're saying, I got to go buy stocks because I manage money for my client and I can't tell them I got 5% this year when Nvidia's up 200%, Tesla's up 100%, the NASDAQ is up 50%, and I got them 5%, and inflation's 3%, and they got to pay me a fee, and they got taxes on top of that, so they really got zero. So that's the opportunity cost when it comes to cash. Now there's risk. You could have bought, I don't know, Beyond Meat, and now it's worth nothing or whatever. So you could have bought something that went down. So cash and bonds is black because I think that's okay. But if you're 80% cash and bonds, you're missing out. Now don't FOMO right now, right? So don't FOMO in now. Wait for a dip. Wait for a pullback. In October, we had a great pullback. Buying stocks in October. And now we're sitting here smoking and joking. This is great. Santa Claus rally. We just had the Santa Claus rally, in my opinion. If you bought in October, that's your Christmas gift. Now the cherry on the top would be a year-end rally. Which I do think is possible. I do think we could still get a year-end rally, and that's why I really like that the market is starting to curl over. If we pull up the S&P, what I would love to see is I would love to see us pull back or just chop sideways here, build the momentum. Last few weeks of December, boom, we get a nice push. January comes, people got to allocate to their Roth. People, fund managers moving things around for the start of the year. And I think you'll see the market continue to move up. And I think earnings are going to still be strong. These tech earnings that we had recently were so good. And I think there's no reason why they would slow down. I mean, I still pay my Microsoft subscription. You know, I still pay my Tesla insurance, my Tesla car payment, all those things. Still pay my Enphase bill. So I'm looking forward to see the earnings coming up in the next few months. So that's what I'm hoping for. A little pullback and then get back to buying some stocks. So things I'm looking to buy right now. Tesla, I've been buying. I bought 2 big chunks, one at 190, 199.95 or something, and then 225. So if we can get back to 225, I will buy some more. There's a couple accounts that I need to fill up my Tesla position. The SMH, I'm also looking to add some more at 150. If we get to 150, I'll do a nice lump sum. If we don't get to 150, I'll just start dollar cost averaging. In 2024, I'll probably set something up to every other week or every month. I'll just, you know, buy X amount of shares and just dollar cost average there. And that goes the same for the Qs. 375 is the price I'm looking to start a lump sum. And if we keep falling from there, I'll just keep building a position there. The TLT, the bond trade, it's been working nice. So where are we at? I mean, that's great. We're at 95. So with this, I'm happy with the position I have. For me to add more to it, it would have to drop back under 90. So that's why I have on there 88. We've seen a lot of volume coming in here, a lot of green bars. We are approaching this 200-day, which we've been rejected off of in the past. So again, when you zoom out, this still doesn't look good. We've had rallies like this, and you know, rates have gone down so far so fast. It wouldn't surprise me. Let me add a different arrow here. It wouldn't surprise me if we get a little bump back up in rates, and so that's when I would start to look at maybe buying some more TLT, because this has been quite a downtrend. So we'll have to wait and see what that looks like. I think for me, TLT would be, there's other things I'd probably put my money towards right now instead of TLT. Amazon is one of those, 150. Amazon and Tesla are, there's a couple accounts that I want to get 100 shares in. I'm almost there, so I want to fill up those positions, but I'm being patient and waiting for the right time. And when I do get 100 shares, I'm going to start selling calls to collect some premium to build my cash to go buy either more of those or something else. So these down here, these are companies that I like. These are all things that I own in orange. These down here I do not personally own. I've owned all of these in the past. I do not own them right now. So these are green. I'm throwing these out for maybe if you have a lot of cash, which in October I had a lot of cash and I felt uncomfortable with the amount of cash that I had, and I put it in the market. If you're feeling that way now, don't FOMO and go buy Microsoft at an all-time high or Apple at an all-time high. I mean, do whatever you want. But this is my opinion. This is not financial advice. Be an adult, make your own decision. But I have these 4 down here for if you're heavy in cash and you're looking to start buying something and you don't want to wait for Tesla 225 or Amazon, 140. I think Google under 130 is a good purchase. PayPal, I keep missing the darn boat on PayPal. But I think PayPal under 57 is a good purchase. You just may have to wait a long time for PayPal, but eventually the market will realize, hey, this is a great company with a great balance sheet, with great fundamentals, with solid earnings. So that's another one. Meta is getting a nice little pullback, and it's really interesting to me. If we can get to 300, I think that's a great buy. And you've seen here a nice support around here, the 290s, 300. So I would not be upset buying some Meta down there. And what's the other one? AMD. So AMD had an event today releasing their big competitor to their big chip that's going to be a competitor to NVIDIA. So I'm going to do some research on that. I hope this doesn't run away because this is another stock. It's a semiconductor stock, so it's in the SMH, but to get extra exposure to this field, it's up 1.5% after hours. But again, it's looking similar to the market. It's starting to curl. I hope it doesn't skyrocket back up. I hope we get a nice little correction, shake some people out, and get an opportunity to purchase. 110 is fine. 105 is great. 100's great. Under 100, phenomenal. So those are a couple ideas where you don't have to be as patient as maybe some of these. I'm being real patient here to add to these, but if I had a lot of cash and was looking, I need to get into the market. Always, buying indexes is great, the SMH and the Qs, just because you're not taking single stock risk. But these are, in my opinion, some quality companies at reasonable prices. So that is my 2 cents. We've already gone over the TLT trade. If you got questions on that, find the video down below. That's all I got for you guys. I'm going to make a crypto video right now. Longer video today, so if you're still here, I appreciate you. And if I don't do another video until the holidays, happy holidays everybody. Stay safe. Enjoy the time with the family. And that's all I got for you. Peace out.